Also a warm welcome from our side to today's masterclass, How to IPO for Founders, Insight and Perspectives. My name is Peter Fricke. I'm heading our venture network, our offering for pre-IPO and startup companies to connect them with suitable investors in the pre-IPO phase and even before. We have so far gathered a community and network of over 650 participants, 200 startups, 450 investors. And in today's session, we will definitely talk about how we can cross the gap between private markets and public markets.
Hi, welcome from my side as well. I'm Jasper and Lembke. I'm responsible here for listing and issuer services. So we're at Deutsche Börse covering the accompanying service for the listed companies as well as the listing process. So if you want to go public, we review your application and let you into the trading. So we're the door to the capital markets, you could say so. And we're really happy and we're looking forward to see your questions after our quick introduction to how to IPO for founders. We try to tailor it a bit to young startup companies and make it as interesting as possible. Well, let's see if that works. Yeah, it works. Peter, I'll hand over directly to you. Thank you.
So why is the topic so important? Why you as a young entrepreneur or even more seasoned entrepreneur probably need to think about the topic of IPO, going public and raise capital for your company? Well, if you look at the 10 most valuable companies in the world, they have all one thing in common. And that's it, that they have all made use of the capital market to raise capital, to expand their business, and to really scale on a global level. What we also see when we look at the 10 companies is that they are predominantly dominated by companies from the US and China, and maybe with Saudi Aramco being the exception. So that means we here in Europe, and in particular also in Germany, there's still some room to grow, and we have a strong belief into you, that you can probably fill that gap in the future, so that when we have this session in a couple of years from now on, we will hopefully see also some German, European companies being present in this top 10 list, and this will also help our overall economy.
Well, and before we go deeper into statistics and more into detail, I just want to take a step back and just quickly shed some light on what do we mean when we talk about IPO or going public. IPO means initial public offering. So that means that a company offers their shares for the first time to the public and becomes a publicly listed company. So from staying private, you step onto the big show boom and you're then transparent to everyone. So that's a big step. And I think it's also something which is very necessary for our economy. The companies can raise capital from investors. You can invest in the companies as well. You can participate in their growth, and they can use your money to further grow and strengthen the economy they are located in. So it's an overall ecosystem which has a full circle and works really, really well. To go now into the statistics a little bit more, we put together the volumes of capital raised by IPOs over the last 3 years, starting in 2017. And you can see worldwide, it's a huge amount of money that that companies were able to raise by way of going public by doing an IPO. If you look at the numbers 2019 and divided by the number of IPOs, you will see an average of 143 million. So that's the average money raised by way of IPO. I think that's a huge amount. And we say there's no such thing as money from the masses. And I think that's quite true when you talk about IPO. Of course, there's the opportunity to raise capital otherwise, but for the big tickets, going public is the option to choose for. And then again, how long does it take to go public? Also, we try to find some statistics here, and normally one would have a figure in mind, which is about 10 to 20 years before I go public. But in truth, there are many cases where it's quite earlier. So considering you're maybe a founder in your first or second year with your startup company, and you think maybe 20 years, that's far ahead, and I don't want to spend my time now on considering IPO as an option. That's not quite correct. There are many IPOs which happen in the second to fourth year, and many in the fourth to sixth year. So it's not something which is in the far away future. It's something which is quite attachable and approachable. So that's maybe the right time to think about IPO for the first time in our masterclass today. And also considering the overall volumes of capital raised by way of IPO, those are only the numbers for the IPO. But once you're listed and publicly traded, it's always an option to do a capital increase over the capital markets and to raise further funds. So once you're listed, the capital market could be your primary source for gaining capital. So that's so far the big companies, they are already in the books, that's history. What we want to do now is we want to give an outlook, what is happening in 2020, what's the current situation, how are the IPOs doing in 2020. And of course, we had the big crisis, we have the COVID pandemic still ongoing, and pretty scary, in particular in the first quarter of 2020, where you didn't have a clue where the pandemic was going to and how big the impact will be. And we saw a lot of IPO plans that have been dropped in the first quarter. But also, we see there's a quick recovery. You can see it in the graphs and the performance of the main European indices, DAX, CAC and FTSE. They quickly revived. They are nearly on the niveau they have been prior to the COVID crisis. So a quick recovery. And in a similar fashion goes the IPO market. We have seen IPOs here, and we have seen IPOs in the US and in China, quite a huge number of IPOs. And in particular, when we look at tech companies, there's a real boom. Regarding the figures, I would say we have to expect 57 billion euros of raised capital for tech companies in 2020 by the end of the year. And there was only 1 year in the history of books, 1999, where we had a similar amount of capital raised from tech companies. So it's a booming year for IPOs, and in particular for the tech sector. Peter, what about the European? I spent some words on the US and Chinese market. What about the European markets?
Sure. Maybe more on a general note, like a brief assessment of the European SME market infrastructure. I think it's a common belief, in fact, that in the Nordics, we see quite a number of IPOs. However, I think what's quite an interesting fact is if we actually look at the average issuance volume, it's actually the highest among SMEs in Germany. So that's one fact. But you don't need to only look at previous IPO companies and the overall the average volume. I think other things you need to take into account when choosing a potential listing venue is, for example, your peer group. Do you find suitable investors? What about past performances? And of course also about the overall market environment. And maybe just one additional note on the current year. So actually, against maybe common belief, we are already one IPO up compared to last year. So we have seen 6 IPOs already in our market in this year from a broad variety of different sectors and verticals. So we've seen some pharma companies, some SMEs, and then of course quite an active week within the last 10 days with 3 IPOs alone since last Monday. Overall, these companies have been able to raise more than 1 billion in capital. I think that's quite some substantial amount also if you compare it maybe with the same amount of capital which has been raised in the private market. Here on this chart, we just wanted to show that if you look at some recent tech IPOs from the e-commerce, but also some other sectors, one thing becomes very apparent that, of course, it's a selection of companies. What we wanted to show is, even though you might experience some market fluctuations, so prices are swinging, there's some volatility in the market, in the long run, and we don't need to look back too much, that actually all of these players have been able to substantially increase their value since IPO.
And in particular, when we look at the tech sector since 2010, we've put together some examples with a great performance. But if we look at the average, there was a positive performance by 84%. So overall tech positive performance since 2010, nearly doubled its worth. So that's quite impressive, and it shows that the trend tech is one of the strongest globally. Well, so far regarding the statistics, we'll now jump to why should I do an IPO? What are the reasons behind it? And I think the stories can be quite different. I'll start with some companies where I saw the IPO live and where I saw a bit of the materials, and those are Mynaric and TeamViewer. And Mynaric is a company into satellite technology. They have a footprint coming from Germany, having a footprint in the US, and they needed money to further develop their satellite technology and had a decent IPO for a small and mid-cap company. Were able to raise some money and to further research and develop on their products. So a good example for an SME IPO. And then, of course, we had TeamViewer, one of the IPOs which is globally known, and it was a classical PE exit strategy. The PE sold its shares, and TeamViewer became a publicly listed company. It's one of the rare unicorn tech IPOs that we had in Germany. And it also was an IPO where the investor base is now quite global. Many US investors, many foreign investors. So a very strong story here for TeamViewer. And maybe we have also some examples from the Venture Network. Peter, maybe you want to shed some light on that?
Sure, thanks, Jasper. Yes, we have taken two examples here from 2017. First one being Delivery Hero, and the second one being HelloFresh. I think two names which I don't need to explain in too much detail about their business model to this audience. I think what's quite interesting is that Delivery Hero raised quite a substantial amount for their IPO in particular, of course, to finance further growth, but also to clean their cap table, to give an extra opportunity for some of the existing shareholders, and to diversify also the current or the existing investor base. HelloFresh, on the other side, slightly smaller, with roughly 300 million in capital proceeds here, and their main reason was to financing growth. And I think if you have seen in the last couple of months, maybe some challenges in 18-19, but in 2020, also due to the overall economic situation, I think quite some impressive performance also by HelloFresh. So the reason is, or the question we now need to ask, what could be your motives and rationale for potential IPOs?
There are various reasons to go public, and you can pick the right one for you. But I think starting with high valuation, I see a lot of companies doing and preparing a dual track. That means they are on both tracks doing an IPO or doing a trade sale via private M&A. And it's really depending on where they get the higher valuation, which way they finally follow. And I think if the high valuation on the capital market is satisfying, then they will go public and do the IPO. So high valuation could be a strong reason to go public. Other reasons is that once you're publicly listed and your shares are tradable, you can incentivize your staff. You can, other than bonuses and other incentives, you can incentivize them with shares and bound them closer to the company. I think it's a huge advantage with your staff. And of course, once you're publicly listed, your brand becomes well known, and it's easier to attract new talents. Also, a very good upside of the publicly listing. And another aspect is your shares can be used as an acquisition currency. So that means if you want to take over, you want to buy a smaller company and acquire them and include them into your business model, you can pay with shares. You can not only pay with debt and with cash, you can also use your shares as an acquisition currency. I think those are strong reasons. And Peter, maybe there are some more.
Yes, of course there are. So as I already mentioned in the example of Delivery Hero, it's also one mean to diversify your investor base, which is particularly important also to have maybe some anchor clients in there who can also stabilize your share price in times of high volatility and uncertainty. Then it definitely also enhances your profile, your reputation. You're a public company now, you're more visible to the market, you're more visible also to the public, and that also means maybe more marketing or easier marketing, but on the other side also it helps with raising debt capital, it's easier to get a credit rating by the banks. So that's one additional positive aspect. And then on the other side, of course, it's a way for early stage investors, business angels, but also maybe your PE or whoever has invested in your company as a means of exit, and also to allow or increase the liquidity for your company. So for the first time, your company shares will be publicly tradable, and of course this allows an easy exchange of ownership between different parties. And last but not least, maybe one of the most obvious reasons is definitely simple access to funds to grow your business, be it, as Jasper pointed out, through M&As, but also due to internationalization strategies, maybe for more SME companies to digitize your company. So these proceeds can be used in a number of ways. So now we have talked about some of the bigger examples, some of the rationales behind an IPO, the current environment. I think it's now time to go a bit deeper and really explain how this process actually works, who are the parties who should be involved or need to be involved, and also maybe give you some hints about timeline. And if I'm able, I can maybe convince Jasper to share some of the costs as well.
We'll see. Well, I think to describe the overall IPO process, it would go into detail too much for the time that we have here. So I want to take it on a very superficial level. We've tried to put the IPO process in 4 phases. And I think those phases do not to be considered static. I think the steps in those phases could be exchanged amongst each other, depending on where you're at and where you want to go. But I think those cornerstones are things you need to consider when you want to go public. About the timing, there's a reason we didn't put a timeline to the phases. It's highly depending on where you're at and how big your company is, and whether you need to transform your legal form of the company and all that. So I would say roughly from 1.5 years to 6 months, everything is possible. Where 6 months is really, really challenging and will only be possible for smaller companies which are already well prepared. For bigger companies, I would say 1.5 years is pretty realistic. What should you do when you want to go public? It's always helpful to get in touch with us, with the stock exchanges or with the stock exchange of your choice, and have a first initial meeting and just check on a few points. Maybe you get an introduction to potential partners. Maybe the stock exchange can introduce you to relevant investment banks, or give you some guidance where you are and what your next step should be. So having a conversation with us is always pretty helpful. Forming an IPO team is important. You need to have employees that really focus on the IPO process and maybe have this as a full-time job description. What else is relevant? You need the right partners. You need an investment bank, or probably more than one investment bank. They form a syndicate, and they are responsible for placing the securities in the end. You can have IPO advisors, as well as you will probably need a lawyer for drawing up the prospectus and setting the legal framework. And it could also be helpful to have an auditor which you're consulting on the financial figures. So that's about the first phase. In the second phase, you sit together with the investment bankers of your choice, and you develop the equity story. Equity story is strong and really important word for going public. It's to describe your business model and why investors should give you their money, and what your growth story could be. You need to have the lawyer already drafting the securities prospectus. This will take on average between 6 to 3 months. So that's the average time for having the prospectus prepared and filing it with BaFin and all that. Well, what else do we need? I think there are certain steps which can be done in the third phase, second phase. But I think it really nails down to the third phase. And I would say those are the last 4 weeks prior to the first prize. And in this 4 weeks, you have to do the road shows together with the investment bankers, probably 2 weeks traveling around, or maybe traveling globally, and getting in touch with interested investors, get an idea how the order book would look like and if they are willing to invest and how much. And then the last 2 weeks prior to the IPO, the subscription phase, is the phase where the order book is open. The book building process runs and the orders are placed. And in the end of the second phase, on the evening prior to the first prize, you will do the allocation. you will sit together with the investment bankers and decide on what price you will sell your shares and how many shares for what price you can sell. And then it comes down to the fourth phase, which is the initial price at probably Frankfurt Stock Exchange. We will have an IPO ceremony, a bell ringing event, where you can invite your employees and celebrate your first price. And from that point on, you're a publicly listed company. And it goes along with being transparent and having a price every day on your shares, and you will have a proper market value for your company. So as easy and as short as that, that's the IPO process in a nutshell. I think we can talk hours about the key points, but I think in a nutshell, that's it.
And didn't you forget just one point?
Oh, maybe I should talk about the costs. Well, some investment bankers would grill me for doing that. So it's their business to make a proper pricing for the IPO process. What I can say is really big companies, they raise a lot of money. So a small percentage of a huge amount of money can be justified. So 1% to 2% could be a pricing that they charge for huge companies. For smaller companies, I think the effort and the work they have to put in is pretty similar to doing a big IPO. And since the amount of money is smaller, they will charge probably a bigger percentage. It could be up to 7%. That's what I heard from the market, and I think that's realistic. So that's about the pricing. You convinced me to do it.
Thank you very much. And I guess besides the pricing for the IPO, I think what you also should not forget is that there will be some fees also involved in being public. So in terms of being able to do, let's say, ad hoc reporting, have a proper IR department. But at the end of the day, you of course need to compare it with the opportunity costs you may have when you go from financing round to financing round, which is also quite cumbersome and involves a lot of resources on particularly the founder and the management team. So I think, yes, you need to be aware of these costs, but you also need to be true to yourself and say, okay, but also currently ways of financing via VCs, PEs is also costly and some fees are involved.
Absolutely, and they will also ask you for your financial figures. It's not that they are doing that they will let you do what you want to. You have to report to them as well. So reporting publicly is different, I know, but I mean, it's not like the PE investors are not caring about your numbers. Okay, we propose that we want to shed some light on examples and give some inside perspectives. And here we have one case study for Delivery Hero. Since they are coming from the Venture Network and are part of the Venture Network, Peter, maybe you're the ideal candidate to tell their story.
Sure, more than happy to do so. So Delivery Hero is really a best case example due to a number of reasons. The first one being, when we look at the funding history of Delivery Hero pre-IPO, they really made use of all sorts of financing you will find in the market. So from business angel investment, corporate VC, early stage VC, late stage VC, even a hedge fund was involved. And then I think 1 year prior to the IPO, also some more institutional investors kicked in. So you really have the full perspective of financing options prior to IPO and then also the IPO in 2017. Secondly, if you look at the overall history, so 6 years to IPO and then IPO at Frankfurt Stock Exchange, I think a couple only less than 2 years later, inclusion in the MDAX, so it's quite a significant index already. And then only, I think, 3 weeks ago, they were also included in the DAX. So it's one of the few, at least the only at this point in time, startup tech company of the recent path, which has been able to make it to the, let's say, top 30 most valuable companies in Germany.
Yeah, let's face it, they are in the Champions League.
Exactly. Then another aspect which is quite important when you look at the Delivery Hero case is by the time of the IPO, their revenues were roughly around 300, and they have been able to almost quadruple the revenues until now, and the same is also true for their workforce. So they really made use of these close to 1 billion in capital and in IPO proceeds to further invest into their business, invest in people, create new jobs. Some of the money also went into further acquisitions, I think particularly in the Middle East and in Asia. So even though they're still, and they ran at IPO and still not a profitable business, this kind of very compelling equity story was enough to convince investors for the IPO and is still convincing investors to believe in that business model. And that's also one of the reasons why Delivery Hero did not only use the IPO to raise money, but as you can see on the lower end of the chart, they were also very successful in raising multiple financing rounds, capital and injections since 2017. That's probably also one of the reasons why their market cap is now close to 20 billion. So that's also a 5 times increase compared to the market cap at IPO.
From zero to hero.
Exactly.
Okay, now we've got to put together what we've talked about, some lessons learned, some key points you should take away from this lesson. I'll start with timing, and I say timing is crucial. With timing, I don't mean the IPO windows. There are several windows over the year where it's proper to do the IPO. With timing, I mean use the momentum. I saw the electric mobility trend in the end of 2018, where there were 3 companies here in Frankfurt which made use of that momentum and went public. Those were Akasol, Bata, and Waterbox, all with an electric mobility story, and they had quite successful IPOs in that window. So it's a trend where which you can make use of. What do we need to consider as well? I think finding the right consultants is crucial. So if you're a small company, you probably need investment banks which are focusing on doing IPOs for SME companies. I think that's very important to have the right partners. And we as a stock exchange, we can help you find the right partners. So a very important step. Peter, maybe you have some aspects you want to mention?
Yeah, I think, for example, also involving your employees at a very early stage in time and also keep them well informed. I think that's not only true for your employees, but also to the general public. I think you need to consider that with the IPO, you make the transition from being a private company to being a public company. And with that, there are also certain responsibilities attached. And that means this kind of proper communication, very clear communication is really crucial, not only internally, but also externally. And I think that's also a reason why many companies in this IPO process are also involving IR and PR companies to really make sure the equity story is neat and proper, and this kind of storyline also continues after the IPO.
I think you need to consider conflicts of interest. I think there are some conflicts of interest which are quite obvious, and I think it's the investment banks. They have 2 customers. They have you as a customer, and they have also the investors investing in your company, your IPO, as customers. And the investors are probably their long-term customers, so they don't want to sell anything in which they don't believe. So that's important. And that will also affect the price because they don't want to oversell your company to the investors where they have a strong relationship with. It can be an upside, it can be a downside. It's just something you need to be aware of and always check for those conflicts of interest when you're seeking advice. It can help to have a neutral partner on board. An IPO advisor is quite neutral when it comes to choosing the right partner. So it could be a trustful source. Professional roadshows. Let yourself be coached. Trust in the advice from the investment bankers when it comes to the equity story. Rely on their advice. They have done it for several times, and they know how to present an equity story and will help you with that. And I think you should do it. And doing a very professional roadshow is an important factor when you have a full order book and a proper pricing on the first day of trading. So I think that's about it. Lessons learned. Peter, I want to hand over to you to have the last words. Maybe we'll have some questions later.
Sure. Yeah, I hope you enjoyed the last 25 minutes. I hope we were able to get across the message that the IPO is not always as difficult and complex as it might have seen before that. I think we can only offer that we are here to help. Not only now in the Q&A session, but also afterwards. You'll find our contact details, but also please feel free to add us on LinkedIn and other means. And yeah, we do also have a variety of newsletters we are offering, not only from the Venture Network, our Venture Weekly, which always gives a good insight and overview about recent funding rounds and so on, but also from the capital market, we do provide quite a substantial amount of good knowledge and expertise, and we're more than happy to share this with you.
All right. Thanks a lot for your presentation, Peter and Jasper. I think we got some great insights here. We already have the first questions that are dropping in. Some of them you already answered, but I will get in touch with them again. One is from Peter Brun. He asked, what are the requirements or the prerequisites to an IPO? When is a good time for a startup to consider to do an IPO? You talked about timing before, but timing is easy to say. Like, do you have an answer here?
Well, maybe we'll split it. Maybe you talk about a little bit capital market readiness, and I about the legal requirements.
Sure. Easy answer is probably any time is a good time to think about this. Whether you then actually pursue it, I think that's a different question. I think what this session was also about to get the momentum going, to basically plant that seed into everybody's mind and brain that yes, the IPO is not only an exit channel, but also a mean of raising capital. So it should not be the end of the journey. It should be a tool to enable your journey and to help to expedite it and enlarge it. I think usually it also depends a little bit on the business model. There are certain business models where profitability or at least decent amount of revenues is really substantial. Otherwise, you also have difficulties convincing the right investors. And there are others, in particular biotech or more tech-oriented, where you can also do the IPO without even having some revenue. So it really is a case-by-case discussion.
And we, from a stock exchange perspective, we tried to reflect that with having different segments. Of course, there's the prime standard. Companies listed in the prime standard can be included in the DAX. And I think the prime standard is a segment for ready companies, for big companies. We've also created a segment for SMEs, for small and medium enterprises, where we have the thresholds certainly lower, somewhat lower than in the regulated market. So if you want to go public, you have a market capitalization ideally of 30 million, and you need to fulfill certain KPIs. And we are quite flexible on that. 3 from 5 KPIs need to be fulfilled. You need to have at least 20 employees, 10 million annual turnover, 5 million pre-IPO gathered capital, a positive balance sheet, and I can't think of the 5th criterion right now. But as you can see, you don't need to have, if you wouldn't have to fulfill 3 out of 5, then you don't need to necessarily be profitable at the time you go public. For a biotech company, it will always be the case that they seek money and want to raise funds when they are not profitable. It's part of their business model to foster research and development. So the criteria are quite flexible for small companies depending on their business model. So we have an opportunity and we have an option for everyone, I think.
All right. Chantal wants to know, do you have a famous example from a startup how not to do an IPO? So where something went extremely wrong. Do you have something there? Do you have insights there? And maybe you could learn out of this? Or is there nothing in your mind? Or is it difficult to talk about that?
No, I mean there are examples, and I think a prominent example could be Wirecard. But was Wirecard from the beginning of a fraud company? Is it now something which is very dubious and difficult to talk about publicly? But in the end, it will turn out how you develop and perform on the capital markets. There are many companies which go insolvent and go broke, and I think the same would happen if they stay private. I think it's not for going public that a company goes insolvent. So it highly the company itself. So there are no real bad examples. Of course, I think there are also good companies which have a bad performance on the capital markets on the pricing side, but are still a good company and are healthy and have a proper business model. So it's not everything about the price development.
All right. Peter wants to know how to find a good investment bank. What would you recommend? Like, are there any criteria you would say when you choose it? Like, you're providing a lot of information and a lot of things to get in touch with the startup or with the company.
Maybe I start and you can conclude. I think it's important to also have a good personal relationship to the investment banker, because at the end of the day, they will really take you on a journey to the IPO, and in particular, the last couple of weeks, they will be very, very rough, and you'll probably spend more time with the investment banker than with your family. So therefore, I think also on a personal level, you have to somehow match. So that's probably one criteria, and the other one is there are different investment banks, maybe specialized also in different business models, but also when it comes to the market capitalization you would like to achieve or you already have. So I think at least in Germany, we have at least 20 to 30 different banks who are able to take you public, but then at the end of the day, it depends on your particular needs, and then you still have maybe, in every case, you can choose from 5 to 7. And that's something we are more than happy to help you with, to get to know them, to talk to different players, that you also get different opinions, and then at the end of the day, choose the 1 or 2 banks you feel most comfortable working with.
I think there's not much to add. For the big companies, they know their banks. So I think only for the smaller companies, this question is really relevant. What we can do, we can make an introduction, give us a call, reach out to us, and we can organize a bank roadshow where we introduce you and your company to several banks here in Frankfurt. I mean, the big investment banks have a presence here in Frankfurt. So we can organize something. And then you can have your own feeling, your own estimation on which partner you should choose.
All right. Yeah, I think, like you said, the most important thing is to have you can trust your banker. That's really important. And as you mentioned, you have a lot of information for them, and they even can contact you in person. Yeah, I would say if there are no questions left, I would say thank you to you, Peter and Jasper. And like you mentioned, reach out to them if you got any questions. They got a lot of information provided for you, and connect via LinkedIn. And yeah, I hope you enjoyed the session, and have a great day, and have fun with the Bitz mainstream if you want to join there. All right.
Thank you.
Thank you.
Thank you. Bye.
Bye.
Bye-bye.